President Trump has ignited a new trade war. On April 2, 2025, he announced sweeping tariffs on imports. These tariffs target countries that impose high tariffs on U.S. goods. The administration released a Dirty 15 list. These countries now face reciprocal tariffs from the United States. This move sent shockwaves through global markets. Investors are worried. They fear a repeat of the 2018 trade war with China. That conflict slowed global growth. It also disrupted supply chains. Businesses are now bracing for new uncertainty. The tariffs could raise costs and complicate trade relationships. The new tariffs are already impacting consumer prices. Imported goods are becoming more expensive. This is fueling inflation. The trade war is also creating geopolitical tensions. Targeted countries are threatening retaliation. This escalation could further destabilize the global economy. Traditional markets have reacted swiftly to the trade war. The S&P 500 suffered its largest one-day loss since 2020. Investors are pulling out of stocks. They are seeking safer investments. Bond yields have also fallen. This indicates growing fear of a recession. The trade war is particularly impacting the tech sector. Many tech companies rely on global supply chains. Tariffs disrupt these chains and increase costs. As a result, tech stocks have been hit hard. Coinbase and MicroStrategy, two companies with ties to the cryptocurrency market, saw their shares tumble. The trade war is exacerbating existing economic concerns. Global debt levels are high, trade imbalances persist. These factors make the global economy more vulnerable to shocks. The trade war is a major shock. It could trigger a broader economic downturn. Amid the market turmoil, Bitcoin is attracting attention. Some analysts see it as a safe haven. They argue that Bitcoin's decentralized nature makes it immune to trade wars. Governments cannot manipulate it, they cannot devalue it. Bitcoin has shown resilience in recent weeks. While traditional markets tumbled, Bitcoin's price remained relatively stable. This has reinforced its appeal as a hedge against volatility. Some investors are moving funds out of stocks and bonds. They are seeking refuge in Bitcoin. However, Bitcoin is not without risks. It is a highly volatile asset. Its price can fluctuate wildly. This makes it a speculative investment. Furthermore, Bitcoin's regulatory landscape is uncertain. Governments around the world are still grappling with how to regulate cryptocurrencies. This uncertainty could impact Bitcoin's long-term prospects. The trade war is reshaping the global economic order. It is accelerating existing trends. These include deglobalization, geopolitical competition, and the rise of digital assets. Understanding these shifts is crucial for investors and policymakers alike. The long-term impact of the trade war remains to be seen. Much depends on how the situation evolves. If the trade war escalates, it could lead to a global recession. This would have severe consequences for all asset classes, including Bitcoin. In this uncertain environment, staying informed is paramount. Investors need to carefully assess the risks and opportunities. They should diversify their portfolios. They should not put all their eggs in one basket. The trade war is a reminder that the global economy is interconnected and complex. Navigating these turbulent waters requires prudence and vigilance.